Warm greetings to our viewers and welcome back to Bulletin Bites. Latest news on law, tax and business in India. Reflecting on 2024, India has seen remarkable strides in various sectors. The year witnessed significant advancements in technology, healthcare and infrastructure, bolstering the nation's growth trajectory. Despite global challenges, India's resilience and innovative spirit have shone through, fostering optimism for the future. As we look ahead, let's build on these achievements and continue striving for progress and prosperity for all. On that note, let's recap Q4 2024 via Bulletin Bites. Starting with company law updates. The Ministry of Corporate Affairs has issued circulars providing clarity on the conduct of annual general meetings scheduled for 2024 and 2025, while also extending the deadlines for filing key corporate social responsibility forms until 31st of March 2025. Moving on to FEMA and IBC updates, the compounding process has been simplified by the Reserve Bank of India to enhance transparency, efficiency and voluntary compliance, aligning India's practices with global standards. In a recent judgment, the Bombay High Court clarified that funds deposited in court by a corporate debtor prior to the initiation of the corporate insolvency resolution process under the Insolvency and Bankruptcy Code 2016 remain part of the corporate debtor's assets. Here are some labour law updates. The Ministry of Labour and Employment has mandated the registration of digital signature certificates for employers with the Employees Provident Fund Organisation and set a 15-day processing timeline. Further, the Employee State Insurance Corporation has introduced Aadhaar seeding for insured persons and employees. Judicial rulings have reinforced employee protection, such as the necessity of criminal conviction to withhold gratuity, validation of workman status based on duties performed rather than titles, and safeguards against arbitrary job offer revocations or termination of casual labourers without notice. In consumer and environmental law, the Central Consumer Protection Authority has issued guidelines to combat greenwashing, requiring companies to substantiate eco-friendly claims and ensure transparency with penalties under the Consumer Protection Act. In food industry, FSSAI has mandated PAN linkage with licenses and registrations to improved traceability. Further, with the aim of protecting consumers, promoting sustainability and simplifying compliance, the Ministry of Environment, Forest and Climate Change has granted exemptions under the Air Act for low pollution industrial plants and decriminalized offences under hazardous and e-waste management rules, replacing criminal charges with penalties under the Environment Protection Act. There have been some important rulings given by the courts and law tribunals across the country. The Delhi High Court recently ruled that the resale price method (RPM) is the correct method for benchmarking in the case of a trading business. In this case, the taxpayer was involved in buying and selling imported goods without making any further changes. However, during the assessment, the tax officer rejected the use of RPM by stating the taxpayer was not a simple trader due to its significant spending on advertising. On further appeals, both the tribunal and the court rejected the tax officer's view. They upheld the taxpayer's use of RPM for benchmarking. As you would have heard from time to time, the topic of intra-group service has always been a highly contested transfer pricing issue in India. In a recent ruling of the Mumbai Tribunal on the issue, the tribunal held that the tax authorities cannot judge or decide upon the need of services. It is for the taxpayer to decide. However, the important point to highlight in this decision is the taxpayer had maintained documentary evidence to justify actual receipt of services for its business. The said ruling is important for all the companies that receive centralized services from their group, but do not maintain documentary evidence to support actual receipt of such services. The 55th meeting of GST Council was convened, which decided a few issues based on representations received from the industry with respect to GST rate and classification. Amongst other recommendations relating to changes in GST regulations which are likely to be introduced in the upcoming budget session of the Parliament, the Council has also recommended changes to overcome ruling from Supreme Court and payment of the pre-deposit in cases involving dispute for penalty amount only. As an outcome of the meeting, various clarifications are issued by the government which are resolving the disputes for the industry. Further, the GST rules are amended to introduce timelines for self-invoicing in case of goods or services attracting liability under reverse charge mechanism and prescribing procedure and conditions for GST amnesty scheme apart from omitting rules which restricted refunds in respect of certain exports. We will also like to inform you that for importers or exporters, the government has introduced voluntary payment facility on ICE-GATE portal without any further approval by officers of customs. Further, exporters availing the export incentive under remission of duties and taxes on export products scheme in excess of INR 10 million are required to file annual return, and delay in filing may attract late fees or denial of incentives. It is also important to note that the extension of remission of duties and taxes on export products scheme, which expired on 31st of December 2024 for units availing the benefit of EOU, SEZ and advance authorization, is not extended further. The CBDT has authorized senior income tax officials to entertain genuine claims of taxpayers who have missed statutory deadlines to file for such claims, subject to fulfillment of prescribed conditions. These include missed income tax refund claims, set-off, a carry-forward of losses, etc. Also, in cases of delays in filing requisite forms in respect of lower corporate tax rates availed by the taxpayers in their tax returns, the CBDT has decided to condone such form filing delays for the assessment years 2020-21 to 22-23. Moving on to some interesting income tax decisions of this quarter, the Delhi High Court has decided that the interest calculation for income tax refunds due to the taxpayers as per law would be until the date of actual receipt of such refunds by the taxpayers, rather than until the date of grant of such refunds or issuance of the refund orders. This would support cases of taxpayers who have been aggrieved with the Income Tax Department's approach of not granting interest on delayed income tax refunds in a fair manner. In another interesting decision, the Delhi High Court has analysed the activities undertaken by a liaison office of a foreign company establishment in India to decide on the issue of whether the liaison office constituted a permanent establishment in India. The court held that activities such as market research, promotional activities, training, etc. were auxiliary in nature and were not an essential or significant part of the principal business activity of the taxpayer. The court accordingly held that the liaison office did not constitute a permanent establishment of the foreign company in India. BPO update for this quarter is on monitoring of foreign transactions and the basic rules and regulations around it. Importers and exporters need to have adequate knowledge of the rules and regulations laid down under the FEMA, conveyed by RBI through various circulars. These regulations relate to manner of payment, time limit of export receipt, import payment, and documents, evidence to be submitted to the bank for reconciliation of entries under Export Data Processing and Monitoring System, also called EDPMS, and Import Data Processing and Monitoring System, also called IDPMS, as stipulated by RBI. IDPMS and EDPMS are digital platforms that monitor trade transactions in India, and hence it streamlines the foreign business. The RBI mandates that all such importers, exporters in India use this platform, as they automatically gather details of exports and imports from the customs database and mark the payment status and realization of each transaction. The IDPMS and EDPMS system provides an automated database for import and export transactions, which helps in tracking, managing, and processing of the data for both the business and the statutory authorities. Dear viewers, with this we would like to conclude our Bulletin Bites. As usual, for detailed information, refer to our newsletter and get in touch with us. If you found this bulletin informative, please press the like button, share it with your colleagues and friends. Stay tuned, stay safe, and stay updated.